welcome to yet another episode of Voices of Vayana. Today we have with us Parthasarathi Patnaik, the Chief Risk Officer at Vayana. Partha is a seasoned banker with nearly 30 years of experience across RBS, ABN AMRO Bank, CRISIL and Tata Steel. Partha has had the unique perspective of heading risk management in his early professional years before leading teams to build profitable businesses in corporate and investment banking, and more recently in setting up a VC fund in India. Partha is an engineer from IIT, an MBA from Jamnalal Bajaj Institute of Management Studies, and an alumnus of Wharton Business School. As Chief Credit and Risk Officer, Partha is currently building Vayana's credit underwriting capability and overall risk management framework to enable Vayana to extend financing deep into the MSME ecosystem. Thank you so much for joining us today, Partha.
All right. Yeah. Thanks so much, Akshay, for having me here. Good to start the new year, doing this podcast with you.
Thank you, Partha. So to just start off, you've had an incredible journey to becoming a CRO. Can you walk us through your career path and what really drew you to FinTech?
Sure. So, CRO sounds a little intimidating. And as I've been told, I will try to keep my podcast as light as possible. Look, I'm now 53. That includes 23 years of education and 30 long years of trying to make a living. Like you mentioned, I've been through various organizations over the last years. Started off on the shop floor in Tata Steel, post my engineering, moved across to financial services in CRISIL, post MBA, into banking logically, into corporate and investment banking, venture capital investing, etc., etc. So it's a long story. I think, like with every autobiography, if you were to look back at the story, you can make the connections. But I strongly believe that there was no big grand plan as I started out to get to where I am today. I think it's been a series of coincidences, incidents, and God knows what, which has eventually brought me to doing what I'm doing today. But in the middle of all that, certainly there were some planned moves. And specifically, as far as FinTech is concerned, I think about 10 years back when I was just about getting bored with banking and FinTech was just beginning to show up in the horizon, I decided to try and this is all about and see if I could fit in there because the opportunity looked really exciting. I, in fact, took time out from RBS. That was the bank that I was working in then. Just went away to the US for a few months to go and meet people, do a course at Wharton at that point in time, actually get a sense of the revolution that was happening out there, which also convinced me that this revolution is going to show up at our shows one day or the other, and soon enough. And which is why I got back from the US at that point in time and decided that let me step out and try and figure out this opportunity. 10 years back, FinTech was just about being spelled correctly, if I may. In India, it was just that nascent. I actually set out to try investing into this sector through an angel investing fund that a couple of colleagues and I actually set up. What really caught my attention then, while we went through a number of pitches that early stage founders, etc., were making to us, was the amount of energy that they brought to the table. Each one of them, I remember, seemed to have an idea which in their minds seemed to be the one that would change the world. And I think that really caught my attention, especially since I was coming from the dull and dreary banking sector. Here was a segment of the world which was extremely optimistic about the future. And there seemed to be a lot of capital coming in there as well. So that seemed to be the right place to be in. FinTech was something that I could leverage my past on. And it's something that I wanted to actually spend the rest of my career trying to build out. And coincidentally, like I mentioned, there are lots of coincidences and accidents along the way. Coincidentally, I met Ayer, who was incidentally just about beginning to think about what Vayana should look like going forward. And there was a meeting of minds. There was a meeting of values. I think there was so much in common that I decided to actually come aboard Vayana at that point in time and try to build this journey from there on. So I think FinTech is something that appeared in the horizon 10 years back. I was fortunate to have seen it as an opportunity. I think it is a great place to be in going forward. The opportunity is still at its nascent stage, arguably. We've got a long way to go. And for many of the younger listeners to this podcast, I think you are in a great place if you've actually chosen this as a career.
Thank you, Partha. So off the record, you did mention that, you're passionate about traveling, you really like adventure and sports. So I just wanted to understand, as someone balancing professional life with obviously passions like the ones you mentioned, travel, adventure and sports, what personal values or principles guide you both at work and outside of it?
Yeah, I think before the audience starts getting ideas about the fact that I do a lot of travel, adventure and all that, I think that is part of my 50 plus year old persona. I think there was a very different set of priorities when I was 50 minus. But nevertheless, I think it's a fact that as one has gotten older, I think a lot of these extracurriculars do tend to take up a lot more of your time because your priorities change. But just going back to all of these interests outside work, I think there is so travel, adventure, sport, I think are very, very, very dear to me. They both help me at work and outside of it. The key thing here really is about trying to maintain a balance between all of these interests. Overdoing work at the cost of fun or vice versa, or having too much fun at the cost of work isn't really such a good idea, right? So I love going to the mountains, head off to the Himalayas. I try to go there every year to take a break from our usual city life. I have traveled extensively over the years, and this is something that I have loved doing, is something that I love partaking in terms of both planning, going and visiting places, actually getting a sense of the local culture, etc. And of course, my biggest passion is sport, both watching sport and playing. I do play badminton. I play reasonably well, I think, for my age. I have been participating in various tournaments lately. In fact, I was quite flattered recently when some people in the circuit mentioned that I'm like the great Gopi Chand. But as it turned out, they were referring to my demeanor and they were not referring to my skill at the sport. So while pursuing all of these interests, what I am constantly aware of is the need to maintain a balance. So I think where I've always tried to focus on is keep an eye on whatever your goals are and rearrange your priorities accordingly, and be very aware of the constraints that you're working under. And why am I saying this in the context of all of these out of office passion is that just in partaking in a sport, partaking in an activity, showing up is itself an idea of taking risk, as opposed to leading a very passive form of existence. So it works equally well at work and at play. So staying passive, you actually lose nothing, but then you gain nothing either. So I really feel you need to show up. That I think is a key driver in my mind to make progress.
So, Partha, do you remember your first leadership experience, whether in travel, work, sports, and what did that teach you about navigating challenges?
Yeah, so look, it's been 30 years of working, and so there are very many stories here. But I think some of the ones I remember are the ones where, for most part, I've been thrust into leadership roles that I didn't know I was capable of managing. So, anecdotally, I can think about this one particular experience many years back. I was very young then, very, very early in my career. My boss, who was then the CRO of ABN AMRO Bank, the bank that I worked for then, asked me to take up an assignment at Calcutta to head the credit risk function in that region. I was barely, I think, 28 years old or thereabouts. And I was being asked to fill in the shoes of a person who was 2 or 3 grades higher than me, was a middle-aged 45-year-old, 50-year-old gentleman who was both respected and feared in the bank then. And here was this thin, gangly 20-year-old who was asked to go on and take that position. I think when I got there, I remember being terribly intimidated over the whole idea of actually taking up the responsibility and dealing with people who were certainly older than me and far more experienced than me. I actually was there for 2 years before heading back to Bombay on the next assignment. When I look back at my experience over the 2 years that I spent at Calcutta, I got a sense that the people that I eventually dealt with, all of these seniors as I saw them from an experience standpoint, who ironically were junior to me from a role standpoint, but there was immense respect, mutual respect between all of us as I left the branch and headed back to Bombay. And when I look back at that stint there, I think the one thing that stayed with me about that experience was the need to really have humility and have respect for the people around you. And when I walked into that role, knowing that I had a seat at the management table without having the skills for it. And I think that very conscious or being conscious of that limitation of mine, I was probably there because of my qualifications and not because of my skills. I was probably there because my boss saw something in me that led me to having that role. But in my mind, I knew I wasn't prepared for it. And I needed to work to get there and to get people's confidence in me. To me, I think the most important thing at the bank, at the branch that I was working in was respect and the need to respect people around you. So I strongly feel that great leaders are those who respect others first and in turn earn others' respect for themselves. Okay, great leaders to my mind are also those who spot talent and nurture talent.
Yeah. Okay. So thank you, Partha. I think this was really insightful. So just moving on, from we're coming back to the in-office questions. I just wanted to understand a little bit about the sort of work we do and everything, just sort of elaborate a little on that. So, Partha, to start off, obviously we know that access to credit is a very critical driver of inclusion, but still it remains a challenge for many. So, what systematic barriers do you think fintechs are uniquely positioned to overcome?
So, look, I think it's not really access to credit, which is the problem statement. It is access to affordable credit, which is the problem with bringing about financial inclusion. So, if you think about it, I mean, every borrower, every small business or individual out there does have access to some kind of credit. What they don't have access to is the credit from the formal banking system, which is much cheaper. All of them access informal credit through money lenders, and which is often at usurious rates of interest. And that being the case, what happens is that the small borrower is paying huge rates of interest. It actually prevents the borrower from growing to a reasonable size, and for most part also bankrupts them. I think that is the problem that one needs to actually focus on. What we've seen, and we've all been bankers, is that banks are actually conspicuously absent from this segment. And this is not because the borrower or the small borrower is a poor credit risk. It is just that for the bank, the cost of actually reaching out to the segment of borrowers and commercially lending to them doesn't make sense. It is just not commercially viable to go out and lend to millions of small borrowers, because the cost of lending, and I say cost of lending, it is not the cost of funds for the bank as much as the cost of actually bringing that credit in terms of operation systems, etc., etc. Bank. And I think here's where fintechs have a role to play. We can actually create this bridge between low-cost loan providers and small loan seekers, right? So in many ways, this problem, we've been trying to find solutions to it. There are various cost elements that need to be broken down and attacked individually. So what fintechs have done is they've identified various cost elements. They found ways to improve efficiencies in, let's say, in cost of customer acquisition, in digital credit appraisal, online KYC, loan documentation, efficient transaction processing. There are so many elements to it, and that's what fintechs are actually doing. Taking each of these processes, breaking them down and doing it better. Fintechs like Vayana are actually providing a complete full digital suite of services which actually bring down the costs of pushing credit to these small borrowers to a far lower level than banks would ever do it by themselves. And which is where I think we have this very critical role to play and to bring about financial inclusion in India.
Understood, Partha. So, just moving on a little, as the CRO, you navigate the fine line between risk and revenue. So, what's your approach to ensuring this balance while staying true to the company's mission, which is inclusion?
Yeah, this is actually a supremely important point that you brought out. If you were to look at any bank, NBFC, or any business for that matter, the primary consideration for commercial success is typically measured by, let's say, revenue, profits, or let's say enterprise value. And for us to achieve these ends, the easiest way to do it is to just go out and replicate business models which exist, make money for the firm, for shareholders, and be done with it. But fortunately at Vayana, we've always kind of maintained that our strategic intent is to maximize financial inclusion through innovation while we are looking for revenue and profits. So very clearly, it's not only about revenue and profits. It's about getting there while we are actually focusing on our key objective, which is inclusion. Now, that means that we need to target a set of borrowers in the MSME segment. That's the segment that we are looking for, where the banking system hasn't done its bit. They have either ignored that segment altogether or in many ways mispriced risk to that segment. So really what we need to do, or what we've been trying to do, is trying to figure out if there's a way to assess, manage that risk differently, in terms of using very many different data points to actually look at this segment of borrowers who, like I said, banks consider far more risky. Is there a way to look at them differently, assess their risk differently, manage the risk differently, and therefore make it a proposition that banks would be willing to bet on, right? And that is something that we've done. So through improved credit analytics, through improved credit risk management, which lead to better credit ratings for each of these counterparties, leading them to actually get money from the banking system. So now for us to get there, I mean, it's easier said than done, but to get there where essentially what you're trying to do is go down a path which has not been trodden before. You're trying to reach out to a set of borrowers who are considered far more risky, and you're trying to reassess them and create models which would look at the risk differently. So what we've done here, and in terms of balancing risk and return, is really start off by trading cautiously, build pilot programs for targeted segments of small borrowers, tweak those credit models basis our learnings, and then finally press the pedal and scale up from there. Now, inherently, this process is prone to making mistakes, because if you're innovating, you are essentially telling yourself that I'm going to go out and try something new, which may work or which may not work. And in our case, which may lead to profits, which may lead to our losing money. The idea here is to try to minimize those losses, learn quickly, adapt to whatever new information is available, and then go out and press the pedal, like I said, and reach our objectives, which is built for financial inclusion. I think in that way, this balance that we're into is being achieved, while we are also doing it very cautiously with a very clear view that there's a need to take certain risks to make certain things happen. You cannot keep going down the well-trodden path if you're going to make a difference to the segment that you're actually targeting to make a difference to.
Yes, Partha. And of course, we know that, India has a very unique fintech ecosystem, but are there lessons that we can draw from like global markets that have tackled financial inclusion or innovation differently?
If you think about it, India's sheer size, geographic expanse, ethnic diversity, population, stage of growth, these are actually affording very new, unique opportunities and challenges to businesses in India. So is there an equivalent global model that we can learn from? I think it's quite the converse. I think we are at that stage where much of the innovation of financial inclusion, which is happening in India, might actually become a model for the world. So, let's take UPI, for instance. It's actually become a game changer, hasn't it? I mean, even the smallest business or individual now makes payments in single-digit rupees and doesn't need to use physical cash. It's actually brought in the small vegetable seller into the banking system. So now this solution is uniquely Indian, and actually in many ways is a cynosure of attention of pretty much every other country in the world. The other big change coming through the pipes is ULI. Just like we know of Unified Payment Interface, there is something called Unified Lending Interface. This is something that RBI is leading through its innovation hub, and I think that's going to be the next big game changer. So I think we have make a massive impact on the excluded borrower. If anything, India will actually make the change that the world will follow. I mean, here's a chance that we can actually lead from the front. The world is actually taking notice and looking at us very keenly in terms of what we are trying to do, and how they can replicate whatever we are achieving here within our shores.
Got it, Partha. So, Partha, adventure, of course, involves embracing uncertainty and taking calculated risks, right? So, how has your love for travel and adventure influenced your decision making professionally?
Yeah, look, travel and adventure inherently involve risk taking, right? So, like I mentioned earlier, the act of just showing up, the act of actually setting out on a journey implies that you've decided to leave your comfort zone behind and embrace some level of uncertainty. And some of these uncertainties you may have planned for, and many others you may not have planned for, but are reasonably confident that you will deal with as you go along, right? So, I think when quoting uncertainty, I think it's important to know your constraints, and you also need to know your objectives, right? So in the context of adventure, for example, you don't go out bungee jumping if you know you have a bad back or a weak heart. You don't go mountain biking if your reflexes are slow and maybe your bone joints are creaky or something. So you choose the extent of risk you want to take, and you also are clear about the outcomes that you're looking for, right? So I think, like I mentioned, I'm an avid trekker, I'm an avid traveler. And in many ways, risk-taking is something that comes inherently to those tasks. I think the idea really is, and the principles I use during my travel apply equally well at work. So if, let's say, I'm heading out on one of my trekking expeditions, the important thing is really to identify possible risk events that might come along the way, assess the probability of that risk event, estimate the downside of that risk event, right? And then try and minimize the uncertainty around that particular activity. So during your travel, you actually look at reducing uncertainty by, for example, booking in advance, checking the weather, staying prepared for emergencies, and so on and so forth. So there are a large number of, let's say, what we call known knowns. There are a few known unknowns that you try and prepare for, but what you really can't prepare for are the unknown unknowns, right? And for that, you just build in some buffers, let's say an extra day, extra food, extra cash, and so on and so forth, which kind of helps you make sure that you come out of that particular adventure unscathed. I think this applies equally to businesses and risk management in particular in the lending business. I think fundamentally what we need to realize as a lender or lending partner that we are is to understand what the firm's risk appetite is, basis the resources available to them, the constraints faced by the firm, and basis that go ahead and plan the business activity with all the precautions required to make sure, just like in the travel case, you come out of it unscathed and you have met your objectives. So on balance, travel, adventure, business, life, they're all the same. The principles are the same. You just make sure that you stick to those first principles and you reach the objectives that you set out to achieve.
Sure, Partha. And I just want to end with the final question, which is, as a sports enthusiast, do you see any parallels between decision making in sports and leading in FinTech? Just if you have any personal anecdotes to share, any stories here.
Yeah, look, actually, there's a lot of commonality between sport and business. Typically, in strategy, vision, these are words that are used in the business world. But in reality, strategic thinking actually applies equally well to business, to sports people, and even to individuals. At the outset, actually, one needs to define what are you out there to win a couple of medals? Are you actually planning to become a world champion? If some of these questions are answered ab initio, you decide what kind of effort, what kind of resources you're going to put to actually achieve that strategic objective, right? So, for example, personally, when I got back to the badminton court, what started off as just fun and games, over a period of time, over a couple of months, I realized I can actually do something better. Got myself a coach because what I figured is that there are competitions at my age group, and I'm reasonably well equipped to actually compete there. The objective now has changed to actually trying to win a tournament in the near future. Now, having set that objective, I've kind of worked backwards to saying, okay, I need a coach to take me through this process. I need to establish this kind of regimen, this kind of discipline and work ethic to actually get to that objective. And in many ways, it actually is working out. There have been tournaments that I've been part of over the last year in 2024, where from losing in the first round, I've now started making it to the final round. Hopefully that cup is around the corner. But the important thing here is about planning for, getting that cup and actually executing your strategy to get there. So in sport, like I mentioned with my personal experience, there is a need to create a strategic plan and set aside resources, decide timelines, etc., to get there. When you think about it from a business perspective, and specifically, let's say the fintech that we are, it's very critical that the board and the management team detail out a strategic intent for the firm, because once done, it actually is a beacon for the rest of the team to follow, the operating team to follow, and to steer the ship in a particular direction. It also helps very clearly lay out or decide the kind of resources required by the firm to get to its strategic objectives. So in many ways, the elements required for success in sport is equally applicable in business, be it a fintech like us or any other business, frankly, across sector.
Thank you so much for agreeing to be a part of our podcast.
Yeah, thanks so much, Akshay. It was a pleasure speaking to you.